What is going on, everybody? Happy Friday morning. I'm your host, Chad Dales. Thanks for checking into our latest Trade Black podcast. Finishing strong here this week as we're going to bring in just a moment the CEO of Cresco Labs, Charlie Bachtell, to talk about his latest numbers and really talk about this market of Kentucky and what this expansion market presents for the company. Yes, the overall state passed their medical marijuana program in January. But we want to find out, they're walking before they run, but what does this look like long-term as well? What are some notable trends that we investors should be paying attention to heading into 2025? Plus, Frank Colombo from Verano Capitals is going to join us once again as we recap the entire earnings season. We look at winners, losers, and lessons that we learned. And as well, we'll talk a little bit about the PharmaCan IIPR saga that we kind of highlighted earlier this week with Peter Sack, but we'll go a little bit more into detail. So with that, let's welcome in AV here on a Friday morning. Good to see you, my friend. How's family life?
Been a busy week. Got some good headlines, got some action going on around the space, and edible arrangements are going into the hemp business. So it's been an interesting week.
It has been a very interesting week when you factor that in as well with Texas and among other things. But there's a lot of moving parts right now. But it is what it is, but that's, I guess, somewhat of a good thing. Keep the conversation going, but we got to obviously.
Yeah, it's like mixed signals. It's like mixed signals coming out of Texas when you see SB3 goes through committee, it goes through the Senate unencumbered, and then you've got announcements from Walmart brands entering the Texas market. You've got an announcement from Edible Arrangements that they're entering the hemp derived product space, edibles, beverages, and CBD, and their initial market that they're going into is Texas. So it's like they don't think that there's enough teeth on the bill and it's going to get re-rated before it gets passed in the House of the Texas legislature, or they just had the strategy from the beginning. They're at the point of no return and they kind of just want to get it launched. But it's going to be interesting to see what happens.
Guap, good to see you, my friend. Dank Informer just sent me an edible arrangement with hemp boof sprayed with distillate. Okay, good to know. Guap. Yeah. Well, let's keep the conversation going. Let's welcome in Cresco Labs CEO back to the podcast, Charlie Bachtell. Good to see you. How are things, sir?
Morning, fellas. Good to see you too. Things are good.
Going?
Looks nice and shiny and sunny there in Chicago. It's kind of like rebirth. We made it. Today's the first official day of spring, is it not?
It's either today or yesterday, but I'll tell you, we've got some crazy weather. Earlier this week, we had 80 degrees early in the day and snow at night. So it's that kind of year.
Was it 80 degrees in Chicago?
Yeah.
Wow.
And, shorts come on at 45. So it was a very confusing day.
Yeah, I can relate to that being in Detroit. But look, I wanted to have you on. I know you announced your latest earnings last week, $724 million on the year for Q4. That was a decline of 6% from year over year. But you did report a 15% improvement in adjusted EBITDA, which reached $200 million, which was actually a 26% increase from the prior year. How do you best categorize or describe 2024 as a whole? Because I know we get a lot of different stories from different MSO leaders, but yours in particular.
Yeah, the way we characterize 24 is the true focus on driving cash flow was evident. As you said, slightly down in revenue, but from a margin perspective and from an operating cash flow perspective, significant improvements year over year, and that was the goal of the year. Set us up nicely for 25.
Yeah. Did you want to go ahead, Anthony?
Yeah, I was going to say, Troy, how are you looking at 2025? Are you looking more into disciplined operations, increasing that cash flow and expanding and or stabilizing margins? How are you looking at it as a whole? I don't even want to talk about reform yet, just as far as like the core business goes.
Yeah, so for us, talking to you guys, it's always year of the core. It starts with the year of the core. 23 year of the core, 24 was more from the core, and now in 25 it's going to be adding to the core, right? So we've really created this nice core infrastructure, core markets, core business.
Yeah.
But just like I think everybody else in the industry, you've got to figure out where that growth is going to come from next. For us, we have the good fortune of we've got some states that we can add to our footprint that we have not added yet.
Yes.
That hard work over the last 2 years, producing that cash flow, gives us the opportunity to have the resources. So now we've got the operational capabilities, we've got the systems in place, and now we have the resources to go out and be opportunistic, add some components to the core state, to the footprint, And that's where we see Cresco going. It's a growth story for the next couple of years. Thing.
What can you tell us about Kentucky then? Because I know it's getting a little bit more attention. The medical program was passed in January, but for our viewers and investors following this space, are there things that you could share that we may not be aware of that's grabbing a lot of interest right now? Because anytime anything passes with the new state, it's always a good thing.
I'm excited because we haven't had many new states. Like I don't remember which state was the last state to come online with a medical program, and one that's viable, not 5 licenses and a 5, or 3% THC cap, or but like a real medical program. So we're excited about it. It's not a large state per se, but the structure of the program is reminiscent of previously launched viable approaches to a medical cannabis program.
Yeah.
There's a certain number of cultivation licenses, there's 10 processor licenses, there's 48 dispensary licenses. So it has the regulatory structure and licensing structure for a viable program to get started. We do like the fact that they staged size-wise the 3 types of cultivation licenses. If I'm not mistaken, there's 10 2,500 square foot licenses, there's 4 10,000 square foot licenses, and then there's 2 25,000 square foot licenses. So we like having one of the 2 large cultivation licenses that will be operating. That's north of 20% of the total capacity in the state.
Okay.
So again, the structure 48 dispensary licenses is enough to launch a program. It's not 5. And it's also not 400. So I like the approach from Kentucky. I think it's set up for success. And, we like helping to launch programs.
Yeah.
In terms of the scale of cultivation, what can those licenses grow in terms of grow capacity as the market scales? So is it kind of like they add 10 more dispensaries, certain tier licenses are allowed to cultivate more on a square footage basis, or do you need to acquire an incremental license to grow in that state?
I think it's TBD. The law gives the regulatory body the ability to do certain things as they go forward. So again, I think a really responsible approach by the state. I can tell you the support and the level of engagement from the state is also very encouraging. They want that program to be successful. So they gave themselves the opportunity to make changes and make additions as they see fit going forward. And then it's the obligation of the operator to put yourself in the position to be part of that future growth in the way that the state is thinking about expansion. So look, again, we've got a lot of experience in this, and so far Kentucky's off to the right start. But also just to manage expectations, launching a new program, a medical program from scratch, it's a future growth story. It's not a 25 contributor. It'll be a contributor in 26, and then in 27, I think it'll be a great story.
You brought up a good point, though. When is the last time we've seen a state come on with a medical program? I start thinking in my head while you're talking, and I'm like, nope, that was correct. Yeah.
The last one that was like a real again, no disrespect to the Alabama and the Georgia kind of approach, or Arkansas, but like a real one with a few dozen dispensaries opening all at once. It might be Ohio.
Smoking Joe writes, "What's up with Indiana?" I don't know much about that. Do you?
I don't think Indiana's going anywhere anytime soon.
Yeah.
To be completely honest, but Charlie's correct. I mean, you look at Georgia. Georgia's got a huge population. They've got a medical program, but it mimics what Florida looked like before we got smokable flower. It's just very, very low THC products, very, very onerous indications as to how you can actually gain access to the plant in the state. Kentucky's done it right, and I think it is Ohio that was the last one to come with an actual comprehensive medical program and get it kicked off from the bat.
Georgia's got a very challenging senator, one that doesn't like me very much, and I chase him down the hallways asking cannabis questions. But that has happened a few times. But hopefully next time we go there next week, we will be there. Hopefully he has some time for us. But look, Charlie, like everybody leans to you. You're one of the most respected executives in this space right now. What do you think are the top 2 to 3 main takeaways when you look at this entire earnings season for the overall industry and the health it's in right now? Yes, people are disappointed with reform. They see stocks plummeting right now. There's real concern, and people want to know what's next for this industry. If you're sitting in front of a guest, your shareholders, what is the message and communication that you're saying to your audience right now?
There's a few things. So it is incumbent on every operator to make sure that they are battening down the hatches in a way that produces a very durable organization. And we're gonna have winners and losers in this space. And look, anybody who got into cannabis and has been around it for at least the last handful of years knows that there's opportunities and there's challenges, and you've got to figure out how to turn those challenges into opportunities. So that's where I see us right now. Just looking at 25. Having a new state like Kentucky come online, us participate in it. There's there's opportunities for us to get into states that we aren't in yet. So assuming we're able to successfully get into one of those other states, we still have a more likely than not situation where Pennsylvania passes adult use. Those three things together line up to a really successful 25, which sets us up nicely for 26 and 27.
Yeah. Yeah.
I think you're also going to see, again, there's going to be, and cannabis isn't necessarily unique in this respect. I think people have to take this perspective to all emerging industries. The challenges do present themselves at a certain point as opportunities. And what wasn't possible 2 years ago, now all of a sudden might be more possible. I do think you're going to start to see states be more okay with the idea of consolidation in some way. What we all know about the state licensing caps. And I just think that the evolution of this industry is going to take maybe, as we're seeing, slightly different directions than we thought that it would over the last couple of years. And there's good things that come with that too. While reform isn't moving as fast as we all thought it would, I think we're going to start to see some acceptance at state level that a different approach to what the future of the industry looks like needs to be okay. And they need to work with operators and they need to work with the industry to create successful outcomes, or the industry will continue to see these challenges that are going to be really detrimental, especially for small entrepreneurs, which the states have been really focused on being inclusive towards over the last couple of years.
Mm-hmm.
Charlie, how are you thinking about taxes? I mean, we saw certain CEOs in the space come out and talk about certain companies paying their taxes. Zach George, in his annual letter to shareholders, went so far as to even say that it's hard to judge companies on an adjusted EBITDA basis when they aren't even paying taxes. How are you guys thinking about this on a long-term basis as far as the tax liabilities go and the overall balance sheet?
Well, just to that last point, I think it was tough to judge companies on adjusted EBITDA because of the tax situation in the first place. Like not including taxes one way or the other was not the right way to evaluate cannabis companies. But look, nothing has changed from our perspective as it relates to the position on 280E. And the argument of when the federal agency that has the authority as it relates to the scientific and medical determination of cannabis issues their binding opinion, I think that's a great not only argument for the industry to be able to make, but also I think that's a conflict that the federal government has to acknowledge.
Right.
When they're sitting there saying, well, you're a Schedule 1, so 280E applies. And we're sitting there going, well, you're your own federal agency that has the binding authority on whether or not something is medicinal use has ruled that this does, which means it can't be a Schedule 1. Anyway, I like the legal argument of it, but as it relates to how you're evaluating companies based on their position on it, investors have to be knowledgeable and they have to understand the positions that these companies are in. And it's not just the tax positions, it's the total debts. It's all of those factors that make this industry a challenging investment. But it is that is where we're at now.
Well, I'd like to see and hear like just how these agencies are communicating better with each other in Washington. I know a lot of people have been laid off, but wasn't there, Anthony, you said 5,000 or 6,000 people that were reported to come back to work, government jobs that you'd mentioned to me earlier this week?
Yeah, from the USDA, the 6,000 employees that were fired via the Doge initiatives from the USDA have all been rehired with back pay.
Well, I know we don't really want to look. Everybody's always talking about reform and where that's going to be, but are you seeing or hearing anything that has some communication, better dialogue as to what's going on with different members that are becoming more educated on the industry as a whole since this new administration has stepped in?
Yeah, I think the industry, and I've said this before, the subject matter itself has a great story to tell. It's a super common sense story. So we have to continue to tell it. And we have to expect that we're going to have more objective listeners as we tell the story going forward. The data, I know it's a challenging space for everybody, all of the stakeholders, which is a broad group, all the cannabis stakeholders. It's a tough space to be in right now, but we do have this incredibly thoughtful, common sense story to tell as a subject matter that at some point in time, which I think is sooner rather than later, is going to resonate with decision makers, because it is reaching a tipping point in ahead. You'd mentioned at your intro, edible arrangements getting into the hemp THC edibles space.
Yeah.
Like this, and you're seeing reactions from legislators at the state level and at the federal level. I just feel like we are finally reaching that sort of crescendo where you can't bury your head in the sand and ignore it anymore. So something has to happen. And I like cannabis's position when something has to happen, because we do have a very reasonable, responsible, common sense story to tell.
I mean, you make complete sense, especially when you look at what you just said with people not wanting to recognize the fact that we're Schedule 1. Meanwhile, there is certain accepted medical use that has been justified by the HHS and the OLC to top it off. And it's like people have their head buried in the sand, and they don't want to acknowledge what's sitting right in front of them.
Yeah.
Which means that A, no one cares, or B, there's other forces that are just weighing on them to just not recognize the truth that is sitting right in front of them, which I think is why everyone's frustrated in the industry, because the work has been done. It just needs to be acknowledged, and we get to take that step further, or that step forward as an industry.
Good point. Very good point. Well, we're in Washington next week. There's a global cannabis summit, but it's going to be good to see the mergers of like the North American market with Europe. And have you seen some of the numbers and growth? What's going on in Germany recently, Charlie?
Yeah, I have. No, I think there's a very interesting development that's happening outside of this country, and I think these new data points and these current developments. Again, you mentioned it, Anthony. This dynamic between what's happening in the Texas legislature versus then what's happening in the commercial aspect of that same issue in that state. Like these things coming together. You know, the U.S. being in this position where these 40 out of 50 states, you've got 450,000 plus 500,000 employees, all these things operating in this regulated, really well-functioning version of a cannabis industry marketplace, but not having access to all these traditional resources. You've got international cannabis companies that do. You've got now this development of these markets that are starting to occur and grow in these other countries. And clearly, I think without question, the United States should be the global leader on the cannabis industry. It's slipping away from us. And I feel like the confluence of these things coming together right now, the good and the bad of it, all it does is the noise is going to be heard because it can't be ignored anymore.
Correct.
Especially when you see there's so many low-hanging fruits, job opportunities, tax purposes, companies internationally on senior exchanges, packaging issues where other stuff that's being sold. There's just so much low-hanging fruit that I think would just be flabbergasted with someone like a Donald Trump if we were to see as to what's going on, but then looking at it from an economic opportunity. But this global summit is just a step in the right direction. So as much as people are frustrated with right now the price movement in the industry, which I get, there's still some big conversations that are taking place. And that's where we as a platform continue to communicate. And we appreciate obviously thought leaders like you coming on and giving us updates as to what you're seeing and hearing and what to look for next. So with that, always appreciate you checking in.
Likewise, always appreciate the opportunity. Anytime, guys.
All right. Thanks, Charlie. Appreciate it.
Thank you.
All right. Anthony, I think, is froze. It's a hell of a look, though. What do you guys think? Did I look like him? 1 second. How was that? That's my impression of Anthony. Anyways, let's bring in Frank Colombo from Viridian Capital Partners. He's got a smile on his face. Did you see that? What'd you think? Like him?
Not quite, but yeah, nice try. Good try though.
He's got 10 years on, or younger than me, and he's got a little bit more hair. That's for sure. But yeah. Those were the glory days, Frank.
Yeah, let's not go there. Let's not go there at all. All right.
Good to see you. How are things? Happy Friday.
Yeah, things are good. Busy. One thing that's true about cannabis is no matter what, you can always be very busy. There's a lot going on, a lot of deals in the market.
It has been a relatively busy week on so many different fronts. But if you had to recap this entire earnings season, I know you were on probably 3 weeks ago, me, you, and Anthony Caniglio. We were talking about tax obligations. You like to, I guess, package in tax with debt. And that would explain the reasons why. But now that we've gotten a chance to see all the reports that were announced, like our title says here today, what do you think are like 3 key takeaways from this earnings season that you just consumed and witnessed?
Yeah. Well, like most things in cannabis, whether it was good or bad or indifferent, all depends on how you measure it. And there's always 1,000 ways to measure things in cannabis. Yep. So one way to look at this season is how did companies do relative to earnings estimates, right? And on that basis, and I'll segue away from that pretty quickly because I don't really think that's the important way to look at it. But 7 out of 12 of the companies that have reported, the big guys, beat their earnings, beat their revenue estimates.
Yeah.
GTI, TerraSand, Trulieve, Jushi, Vireo all beat estimates. But in total, for the group of 12 that I look at, which includes Cannabis, Air, Jushi, Cresco, TerraSand, Verano, Cureleaf, Ascend, GTI, Vireo, Miramed, and Trulieve, as a total, that group was basically right on. They were 0.1% below estimates. So the analysts basically nailed it in terms of estimates on revenue. The good news, really, I think, was on the EBITDA side. As a group, the group beat earnings estimates by 2.6%, which doesn't sound like much. But to me, the reason why I put less emphasis on these earnings estimates is that they're managed.
Okay.
Yeah.
As you can see it, because if you pull up estimates like a month ahead of earnings, and then you track them as we get closer and closer to earnings, you see them creep up or creep down. And it's clear that these conversations are happening behind the scenes. They're getting nudged one way or another. So by the time you get to earnings, there's already had been conversations in the background about, oh, you're too high, you're too low. So a surprise is actually a surprise because it's despite whatever guidance they've gotten.
Okay.
So 2.6 is a pretty nice move, and obviously the usual suspects beat EBITDA, GTI, Trulieve, TerraSand, Ascend, Vireo all beat earnings estimates. Now, having said that, I think that a more honest way to look at it is really just like year over year, actual to actual.
Okay.
Correct.
Are we growing or aren't we growing? Okay. It's a fact. It's not estimates. Okay. And I particularly like to look at EBITDA. Now, I know that everybody rags on adjusted EBITDA, but, in the end of the day, profits are what matter. Revenues aren't. And so I look at, what's the trend? How did we do on EBITDA? And on EBITDA, year over year, 8 out of those 12 companies were below the previous year.
Mm-hmm.
And as a group, we were below, the previous year. And I like to break in that EBITDA change. If you think about it, EBITDA is revenue times profit margin gives you EBITDA, right? And so I break it down into those two components and say, did we lose on EBITDA because our margins were worse than expected, or worse than last year, or because our revenues were down? And I put out a chart on this that you might have seen, but the evidence is very clear that these companies that were down on EBITDA year over year were down because of margins.
Mm-hmm.
Their EBITDA margins were down. Much bigger percentage of the decline was margin than revenue, and that stands to reason, right? We all know the reason why these margins are down, and you know, you still have inflation, you still have price compression. You know, companies have done a hell of a job of trying to cut OpEx, but there's only so much you can do, and when we're in this environment of continued price compression, it's hard to avoid this cycle. And you know, I think the people who actually beat, you know, showed over performance year over year, you know, TrueLeaf, and it was, once again, it was margin. You know, their sales were up some year over year, but margin is what really pushed them up. So, you know, it's like Charlie said, you know, these companies have to really, you know, we thought we had buckled our, you know, tightened our belt as tight as we could, but in the end of the day, there's still more to be done. And that basically shows itself if you think of it, look at a different approach, a different look, which is what are analysts saying about 25 now relative to 24? Now that we have 24 in the books, we can look at 25 relative to 24, and you know, it's very much the same picture. You know, as analysts look forward to 25, these same 12 companies, you know, once again, 8 out of the 12 of them are projected to have lower EBITDA in 25 than they are in 24. And the picture is, once again, margin. It's all about margin.
So, so then, Frank, how would you define that? Would you define that as a maturing industry or a rapidly deteriorating industry?
I would say that it's an industry. It's certainly not a rapidly deteriorating industry. I don't think anybody responsibly would say that. I think that what you're seeing is an industry that's grappling with these macro trends that are, you know, hard to avoid. You know, for instance, just ask yourself the question: what changes that halts wholesale price compression? How does that go away? Okay, and I think in some cases you can look at markets consolidating within the state. So you have in-state consolidation. So you get to the point where you get more of an oligopolistic industry structure within a state, and that has a potential of solidifying prices. You know, I think the other thing that to look at, as we talked about in these earnings calls, company after company reduced their CapEx estimates, reduced how much CapEx they're planning to do for 25. So once again, you know, why do you do CapEx? CapEx is for growth, right? So if you reduce your CapEx, you're going to reduce your growth. You know, and so, you know, why reduce CapEx? Well, because the capital markets are still very tight, and there's no progress on federal reform.
Yeah, it's what they can and can't afford right now. But if you look at, like, I was going to say, we have conversations every Monday with Michael Bronstein over Attach, and there's some really interesting conversations taking place in the state Senate regarding Pennsylvania. So we talk about growth, and it sounds like, okay,
absolutely,
you get the green light for adult use in cannabis, but this won't. Do we know when it would actually go live, guys? Is it not until
26 at some point?
Yeah,
right.
And you see that in the analyst estimates, by the way, Shad. If you look forward to 26, revenue estimates are way up. They're up rather than being flat. For 25, it's essentially flat on revenue for this whole group. And in 26, it's up 4.5%.
Right.
And so, you basically say, well, where's that come from? And that's where it's got to be coming from, right? These new markets.
Yeah.
So I think there's an expectation that 26, the governorship in Virginia changes. You start to, that won't probably hit in 26 because it has to work its way through. But Pennsylvania, Pennsylvania could be a big shot in the arm. And that could also help on the margin side, because as you know, when you go open up a new rec market, for a while there tends to be, capacity constraints on cultivation, and you end up having solid pricing.
Yeah.
And does it last? Who knows? Now, the other thing about this earnings season that I think we mentioned with Anthony a couple of weeks ago is what you see is what you're going to get with 280E reform, right? I mean, the companies are already not paying their taxes. So their cash flow does not go up when 280E goes away. What does happen is you remove this overhang of this liability. And, let's say that at the end of this year, 280E goes away. I'm not clear, and I'm not a legal expert on this, but does that mean that the back 280E taxes, like from 24, go away? Or are those, those were on the books when it was in force?
But
so,
Frank, if 280E were to go away, that would hence the reason that rescheduling is actually going to happen. And if rescheduling does happen, do you not see a lot of these companies being able to renegotiate and push their debt out a little bit more? And with that, you'll see more and more states start to look at this differently and come online in the next year, 2-3 years.
Yeah, I mean, I've done a lot of work on this whole idea of debt capacity with and without 280E. And, if you say you're operating in a 280E environment, I can make a pretty good argument that 3 times debt to EBITDA is about as much as you can sustain.
Right.
And there's quite a few companies that are over that. Now, it's not as dramatic as you might think. It doesn't push it out to like 6 times. It pushes it up to about 4 times. And the reason is that it's not really, at that point, it's not about interest coverage. It's about how quickly can you amortize or pay off your debt. Mm-hmm. And, nobody wants to lend to a cannabis company or any other new industry for that matter, 10-year money.
Correct.
So we're saying we want you to pay back your debt in a 5-year period.
Yeah.
Like if you're making a term loan, you want to pay it back over time. So that becomes the real gating item of how much more leverage you can take on. But, I still am a believer that, you'll have a positive impact on stock prices. I mean, how could you not? I mean, we're dragging the bottom right here. I think
Green Thumb and Trulieve then are obviously the winners that you'd say from this earnings season. What's the lessons do you think that we've learned when we look at both Verano and Air Wellness?
Well, I think with Air, the story is still to be told a little bit. I mean, none of these guys, this is not the end of the stories for either of these, but, I think Air has the toughest job of anybody going into this 26 maturity season.
Yeah.
And, you can see that from the fact that their maturing debt is like 8 times their market cap. I can't remember what the exact number is, but it's some big multiple like that. So they have huge amount of debt relative to market cap. And why that's important is it means that there is no solution to be had by debt to equity swap kind of things. Because there's just not enough equity value there to make that happen. Now, on the other hand, Cannabis basically just did a solution that was almost identical to what Air did a year ago.
Yep.
Correct.
So can Air turn around and do it a second time? All things are possible in cannabis, but it's going to be tough
I
because
see Anthony nodding his head and
they
going
have
no.
they have the same investors. They have to
Yep.
basically convince them,
So Frank,
give
what
us more
happens?
time.
What happens if they can't? The
I mean,
obvious.
ATB put out a note on Wednesday saying that Air's common equity was essentially useless and just a call option on the debt. At this point, with them having to recap.
So, I've been putting out this analysis for a month now, where I look at the equity as a call option on the value of the company with a strike price of the liabilities.
Yeah.
And if you think about the Black-Scholes model, you can kind of back solve and figure out what the asset value has to be for the stock to be trading where it is.
Mm-hmm.
And when you do that analysis, there's a number of companies, and Air is close to the top of the list, that show up as having way less than 1-to-1 asset value to liabilities. I'm coming up with them at like 60% asset value to liabilities. And that's a market estimate. I'm just doing the math to back into to what the market is telling us. So, if you put $1 of equity into Air right now, you're just priming the pump. There is no real equity value right now. It's underwater. It's an out of the money option.
Which
so they're not alone. I mean, there are
no, not at all.
Quite a few that are in that bucket, and I put out a chart every week that shows that has a graph in our deal tracker that shows that asset value coverage number, and so I think that is something that is different than what it was last time around. So that argues for them having a worse odds of getting it done, because that was not the case in beginning of 24.
Because I think them getting them, to be honest, I think them getting that part of getting that done the first time around was with the preconceived notion that Amendment 3 was going to pass in Florida.
Yeah, of course.
With Amendment 3 not passing in Florida, I think that was, I don't want to say a death blow to the company, but now they're sitting on a $40 million agreement with IIPR on indoor capacity in the state of Florida. They just had the goodwill write down with I think they messed up the implementation of their seed to sale, which left dispensaries without product. In a medical market like Florida, if that happens to you and your consumers are going elsewhere, they're sticky. Chances are they're not coming back. Just from a fundamental standpoint, I think it's going to be very, very hard for them to renegotiate. I'm expecting them to sell that Virginia license.
Well, I am in print of saying that is one of their few things that they are likely to be able to sell.
Correct. It's valuable. It's immensely valuable.
It is valuable, and I think that is probably the move to the hoop. But you have to say, what's it worth? I mean, you can look at Verano's purchase of Cannabis's operations, not just a license, but actual operations in Virginia for $90 million. And so you say,
I don't think it's gonna touch nowhere near that.
Well, exactly. Yeah. So the point is, they're selling just a license. Verano, bought license and actual operations. So does it sweeten the pot enough to make something else happen? The other crazy idea is that people have floated that came about because of the guy from Tilray, or actually AYR's CEO went on the Tilray board. So could there be some kind of a wacky kick save with some kind of Canopy USA kind of structure being done by some Kronos is also
the problem is the debt.
That ain't happening. I've spoken to them a few times. They laughed at that idea.
The problem is the balance sheet. A question, Frank. I know that you guys are Viridian. You have an investment banking arm too that deals in private assets. Are you seeing deal flow on the private side? Are you seeing deals happening in certain markets right now for assets?
Absolutely, but the pricing is lower. We have an LOI for a private company. I'm not going to say where or how much, but and we're close to another one. So I think things are moving.
Mhm.
Part of it is a reality check. Like, what are the values here? And part of the problem is when you look at somebody like Verano, if your stock's trading at 2 times, you're not going to buy somebody at 4 times
No,
because that would just dilute the hell out of your stock, right? So
totally.
you can't do that. You have to and it's not just Verano; it's everybody down the line. They have a compressed multiple they have to deal with that they can't really buy somebody for a bigger multiple than that. So, I don't think uh, cash is still dear. So these deals are going to have earnouts and take back paper and some cash, but I think you look at some of these companies, and even if their stock is just so cheap that it's not a currency they want to use.
Correct. They can't.
A deal.
They've got their hands tied right now. I mean, if you going back to the Verano deal with the cannabis in Virginia, Verano stock was worth 4x what it was worth today when that deal was inked. Everybody was ranting and raving. Yeah, they were at $1 billion market cap when that deal was done. Everybody was ranting and raving that that's going to be a grade A asset on the cannabis balance sheet. Meanwhile, it's worth 25% of what it was at the time of inking the deal.
Yeah.
I mean, I don't think you can use any paper as it relates to these transactions. What are you guys valuing these assets out on a multiple basis? If you could share that.
Well, I calculate all the same multiples that everybody else does. And I think, on average, we're still seeing trading multiples of 4 times, a little bit above. But if you say, okay, the MSOs are trading at that, and now you're a private company, there's some public to private discount involved in all these deals. Mm-hmm. So we typically look at a 20% public to private discount.
Okay.
So you can kind of do that math and see where you have to be. Now, we are also doing some like non-plant touching kind of deals, and their situation is very different because you're in the non-plant touching world. Your audience is much bigger. PE firms can come in, strategics, and people that are not subject to all these issues. But it's a tough environment, and
couple of things here. One of our viewers actually writes, please ask Mr. Colombo what he has against Glasshouse. Does he know the people? Does he recognize the growth? Has he seen what their cost per pound is? You care to elaborate off of that, Frank?
I don't see anything. I don't have anything against Glasshouse at all. In fact, I went so far in one of our publications to say that every investor should have a little bit of Glasshouse in their portfolio. Why? Because it's a hedge against what I actually think is the worst risk that the big MSOs have, which is honest to God legalization, interstate commerce. Mm-hmm. And that is your hedge. The only thing I have against Glasshouse is their stock price. Okay, you look at their multiples. Where are they trading? They're trading 6 points higher than every other company out there.
Why is that, you think? Why is that?
There's obviously the low cost competitor in the largest market, and that's got to be something of it. The idea that we could go, what if interstate commerce does happen? I think I'll probably be in the grave before that happens, but
I don't think that's happening anytime soon.
Yeah, I don't either. But I'm not sure. Now, to me, it is compounded by the fact that, okay, they don't think so. They don't think it's too high. And why do we know that? Because they just issued debt. Mm-hmm. They just did debt. And meanwhile, they have this shelf at the money filing for $25 million of stock. Now, if I was Glasshouse, I would be saying, okay, you like our stock there? How much do you want? because
Yeah,
I'll
correct.
sell you all you can take at that at these multiples, right? Because their multiples are,
which you
but
explained a couple weeks ago.
They're not doing that. So they obviously don't think so.
Mm-hmm.
A good friend of mine, John DeCourcy, just became their IR guy.
Smart move.
And
Smart move going from air to glass house.
yeah, yeah, exactly.
We'll just leave it at that. But anyway, listen, one last thing I wanted to touch you on was IIPR in PharmaCan.
Yeah.
I know we had talked about this before we actually went live, but Anthony, you
Yeah.
brought up the whole idea of the deal, the cultivation deal that Air did with IIPR, and that was what, 2-3 years ago. But you're starting to see a lot of these deals.
That was last
more
September.
recent than that.
Last year?
Yeah.
That was last, yeah.
But a lot of these, I guess, lease agreements we're starting to see did take place year and a half, 2 years ago. And as a result, you're starting to see more and more defaults in some of these lease agreements. I was just a little surprised because there was a solution between the two parties at the end of January, and fast forward 6 weeks later, and we get this. So what
exactly
happened?
So that's obviously the $64,000 question, right? And they haven't, nobody said, but we can speculate. And so, we start off with the fact of, do you really think that PharmaCan's operations, cash flow, et cetera, went off the cliff in the last 6 weeks? And my answer is no, I don't think so.
No.
Okay. So they knew then what they know now in terms of the outlook for operations. Okay. But if you think about it, there were a couple provisos to the deal. One of the provisos was that they had to renegotiate their June 25 maturities. And we don't even know for absolutely sure how much there is there, but they issued 125 million of the 12s. Now, if they bought some back over time, I don't know, but there could be as much as 125 million of the 12s of June 25 out there.
Okay.
And part of the deal was they had to renegotiate. They had to refinance that. Well, so if you go out, it could have gone. I see kind of two radically different ways this could be happening. One of them is, it's actually a good thing for them to be in default, to go out and have these negotiations with those bondholders. It seems bad, but on the other hand, the conversation goes like this. Okay, we are in danger of losing all of our biggest cultivation facilities. And if we do, it's game over.
Right.
So one of the things that can keep us from having that happen is if you, Mr. Bondholder, Mr. Noteholder, cut a deal with us and push our maturities like Cannabis did, move this out. So it could be that PharmaCan is using this default, and it's a payment default, by the way. They didn't make their payment. So it's not a covenant default. It's a payment default. Debt holders will understand the difference there. It's a payment default. So maybe they're using it as a strong arm against the debt holders. On the other hand, they did not get very much of a concession in rent with this agreement.
Right.
What they did get was they were allowed to walk away from 2 facilities that they were closing anyway, Massachusetts and Michigan.
But didn't they have to find? They have to find tenants.
They don't have to find tenants. The wording says that they have to help find tenants. But if they don't find tenants,
help facilitate.
Yeah, right. But there's nothing that says they have to find a tenant.
So if you're an IIPR shareholder, what do you need to be paying attention here? Are there any warning signals that you should be paying attention to?
Well, I think if you look at their portfolio, and IIPR does a fabulous job of weighing all of this information out. So every deal that they have is on the books, and we can see it. And I guess what from IIPR's point of view, they have an issue here, which is, what if we go to the table and actually do reduce rents on a lot of the PharmaCan properties.
Okay.
Well, what's the next thing that happens? Well,
Lower
every
tenants.
other tenant is right at our doorstep knocking and say, well, how about us? So, they should be rightfully afraid of that snowball kind of effect of, we give these guys a break. Who else do we have to give a break to?
So would they eventually have to lower their dividend in this case, or what then?
They're gonna. I think they're gonna drop. I think they're gonna drop their dividend.
Well, at any rate, I mean, if they don't come to grips with, or an agreement that lasts with PharmaCan, it's 16% of their lease revenue.
Yeah.
And if you just look at their financials and say, can you afford to lose 16% of your lease revenue and maintain your dividend? And I think the answer is no. I mean, they do have some borrowing capability, so they could keep paying the dividend by borrowing money, but I don't think they'll do that. I think that if they can't come to agreement, it means a cut of their dividend. Now, I don't think it's not a credit event yet at or at IIPR. If you look at their financials, they're still generating a lot of cash. I like to look at liabilities compared to market cap, as you know, and it's still very low for them. So it's not at that point. But the other issue that they got to be looking at is, you look down their rent rolls, and we already talked about Air. They have Forefront in their list, which is, they have Tilt. They have they have, who else? There's still a Parallel deal in their list.
They're in trouble.
They have Gold Flora in their portfolio. Now, I think Jushi's a cut above all those guys that we just mentioned, but they're not exactly a sterling credit.
I do like. We're gonna actually have. I spoke to Jim Cacioppo on a couple weeks ago, and we want to talk about the definition of debt and how you view it and how he views it. We're gonna have a nice little debate back and forth with you guys. But two smart guys.
With gloves or without gloves?
Yeah. He's probably watching this right now. But anyways,
no, I'm just kidding.
He
had a point. He had some good points about that.
He did, and both you did. So that's a great podcast. But look, I was a ring announcer in boxing before I became a podcaster. So if we do need to go, I can introduce you guys. But listen, Frank, I always appreciate you logging on here today. We're going to do this actually every other Friday. But good information to share and good dialogue to get people just to understand what these announcements actually mean and what we can expect next. But you're the private investigator of the cannabis industry, Mr. Colombo, Frank Colombo. But let's keep in touch, and I'll see you in 2 weeks, okay?
Great.
All right. Thanks Frank.
Bye-bye.
A lot of helpful information there. But
a lot. And I think Frank is correct. And obviously, full disclosure, I am short IIPR. I've been building a short in IIPR over the last 3 weeks, and I'm betting on that dividend getting cut. And it's correct that they've got a lot of less than ideal operators in their portfolio.
Not a bad way of looking at it. Christopher Brady, jokes aside, you should try out for the WWE. Chris, I'm not kidding you. I used to travel the world doing ring announcing, believe it or not. And I worked for a promotion over in Europe at one time that got bought out by the UFC. But there's only one gig that you want, and that's to be Bruce Buffer. And I talked to Bruce, know him personally. He is not retiring anytime soon. So I'll do podcasting in the meantime. Outside of that, it's really not much of a career. You can work for small promotions, but I don't feel like hanging out on a Friday night in Wichita, Kansas, making $500 being away from the family. It gets to be a little draining after a while.
That does not sound fun.
No, but not a bad angle or strategy, what you just said, because when you start talking about some of those names in the portfolio of IIPR, it definitely, you take a step back, and that's why I'm saying.
I'm shorted. I'm going to continue to be shorted. I think there's a lot of pain for them on the horizon. So I wouldn't go. I wouldn't go short.
When we start talking about some of these deals that were put in place 2-3 years ago, how many times did you and I, like when we were at lunch at MJ Biz a couple years ago, and I remember some of the share prices that we were looking at, and it just seems like a previous lifetime.
Yeah, and I mean, IIPR was a strong company. I mean, BlackRock's got a position in IIPR. IIPR's got institutional investors. It's just when you look at what's going on with their underlying assets, you look at where those assets were underwritten and what they were priced at. It's completely irrational.
Yeah.
Especially with what's going on with PharmaCan. And Frank is correct. If they do amend those leases with PharmaCan on $1 per square foot basis, everyone else is coming to them hat in hand, wanting to renegotiate those leases.
Wouldn't you?
Their overall revenue is going to go down. Their overall net income is going to go down.
Yeah.
You're going to see the dividend cut. If the dividend's cut, stock's going to drop.
Yeah. All right. We got a nice little video I got coming out tomorrow. It's going to be the real cost of cannabis stocks. We'll walk you through not just the share price, but among other things. And as well, Sunday afternoon, we'll come back with a full recap of the biggest developments this week in cannabis for the week of March the 17th. And then we'll be back on Monday with Michael Bronstein to talk about more things, especially I'm going to keep an eye and keep a close eye on what's going on in Pennsylvania, because that seems to be the next catalyst moment. We'll keep talking about that weekend and week
Texas.
out. And Texas. Very good point. And then we're off.
I'm hearing that I'm hearing, and I was actually talking to Bronstein yesterday, that it's in the works that they would expand their medical program concurrently with clamping down on hemp, which could be big because don't forget, names like Consortium have licenses currently in Texas.
Is there only 3 in Texas?
There's 3. Yeah, they'll expand. That's what they're gonna. I think they're gonna expand the medical program concurrently with clamping down on hemp.
30 million people in that state. And then you and I are off on a plane first thing Tuesday morning. And I actually replied to, I think it's a Jamie Campbell's tweet asking people, is there any names that you want us to run into to have conversations with? Look, there's going to be a lot. And at the same time, too, we'll try to find as many people as possible. But Anthony and I will be in Washington, the nation's capital, on Tuesday, walking around Capitol Hill. And then Wednesday, we'll be at an event, this Global Cannabis Summit. So that'll be interesting. And then we'll be back at home on Thursday and then have lots of recap for you come next Friday in our live stream. But it'll be a busy 7 days, but that's okay. Anyway, that should be it. I'll let you run. How's your bracket doing in March Madness? Did you play one?
Haven't even looked at it. I have 2 of them. I haven't looked at them yet.
Yeah.
To be honest, I have zero interest in college basketball.
Look, a lot of Canadians will think like, oh, you must be Canadian, you follow hockey. I don't really follow hockey. I'm a very Americanized Canadian who loves football. And when football is done, I just kind of like, ugh. But I have to pay attention. Alex Ovechkin scored his 888th goal last night. He's only 6 away now from Wayne Gretzky's all-time record of 894. That is an insane record. Like, if there's ever a record in any sport that I thought couldn't be broken, that was it. But
yeah, and I've actually got a quarter pound of hemp in the mail that should be delivered today, of THCA flower that I'm going to get full panel tested at a Florida testing lab to see how it shows up. Bought it with a credit card, didn't check my ID. Just 2 days later, shows up in the mail at my doorstep.
You need to film that when you get it at your doorstep, where you're going to the lab. You got to put that on social media. How many more games are left, Gretchen? I think there's like 10 or 12. So I don't know if he'll catch it this year, but definitely people are keeping an eye on that one, especially you, Gretchen, being in Washington. I'm sure it's getting some news every single day, but you should definitely film that. That would be rather interesting to see what comes back once tested. But
I'll post the full panel COA for sure.
All right. All right, my friend, you enjoy the rest of your day. If you guys want a full recap of what we discussed this week, as usual, scan that QR code and subscribe to our Baked In newsletter delivered to your inbox weekdays, Monday through Friday at 8 a.m. Eastern time.
Chris Brady, great question. Quarter pound was $199, no tax. Delivered.
No tax?
No.
Huh. All right, my friend. Enjoy the rest of your day. Everybody enjoy the rest of your weekend, and we'll see you back here on Monday afternoon. Take care.
Yep. Bye, everyone.
Hey, everybody. Stay connected here. The latest Traded Black podcast. Another great episode under the belt. What'd y'all think? Do you like what we had to say? Please leave any comments below. And as usual, make sure to subscribe to our Baked In newsletter. Check us out on Apple and Spotify. And if you haven't done so already, make sure to smash that like button, leave some comments, as I said before, and subscribe to our channel because we wouldn't be here without you. Thanks again, everybody, for watching.